Good day to one and all. This is Dr. Sivaraman here. I'm just checking whether I'm audible and also the PowerPoint presentation is visible. So that, okay, all okay. Thanks, admin. So I'll start the webinar. Can I start it right now or it's 14 GMT? Okay, fine. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I've been presenting the webinar per session. So during the Japanese session, I presented Asian session live market analysis explaining the expected market moves for the day and also for the week. Then during the European session, I gave the part 1 of tracking the forex market together between 8 and 8:45 GMT. And now we are in part 2 of tracking the forex market together webinar during this time of 14 to 14:45 on 9th of September. I will explain to you what positions I had taken during that of the European session, what happened to those positions, and also we will review the market currently, how exactly the market is behaving, and what we have seen during that of the Japanese session, European session, and finally what sort of moves are seen during that of the US session. So we will do the market tracking using the forecast as well as the market reading technique. Then we will use the effective trading strategy of keeping the hedge order in the last making position and the stop, trailing stop in profit making position, and that way we will be able to handle the positions without any market fear. We will limit the risk and maximize the profit. That I will explain to you after doing the review of the market, what we come across. Now, this is the live market quote page. You find currently Euro is trading around 1.288687 level and Yen is trading around 106.2022 with 20 pips positive net change. Euro is with 8 pips negative net change, and GBP is trading around 60.97, 61.00, 6 pips negative net change, and USD CHF is trading around 93.57, almost around the same level what we have seen during that of the European session. But what happened to that of the commodity pairs? This is what I was explaining to you during that of the Japanese as well as the European session. So when Euro and GBP are gaining and making a small drop of 8 pips, 10 pips, 20 pips like that, they'll make massive drop in the case of Australian dollar for no reason. They may give some attributes, but ultimately there is a big drop in the case of Australian dollar and also the rise in the case of Canadian dollar. So you find overall all currencies are making the USD gaining move. But what is more important is they are making the swings in the case of the majors. And the commodity pairs have made very big moves. This is what you need to understand. So now we'll look into that other forecast, what I explained it. So during that of the Japanese session, they made the dip and the firm up. Then subsequently, they made the swing and the slide during that of the European session. But I took a buy and sell trade during that of the European session. I'll explain to you what happened to those trades. Then they made the slide actually. Now they are expected to make the swing and firm up move in the case of Euro and GBP, but in the case of commodity pairs, they will be making the USD gaining move. So that I explained it. In the case of commodity pairs, they will be making swing and rise, and in the case of Australian dollar, it will be making swing and drop. So ultimately, in the case of the commodity pairs, you will come across the USD gaining move. But in the case of the majors, Euro and GBP are expected to make the volatile moves or swing and rise move, and the denominator currency USDN and USD CHF are expected to make swing and rise move as one-sided rise, without much of a drop. So they may gain about 100, 200 pips and drop about 50 pips. That sort of moves they will try to do it. So we need to understand, avoid taking sell and buy trade in them. Now we will do the market reading for the US session. So the initial low in the case of euro was 1.2877 around 3:30 GMT. Today we have made a note of it, and every day we make a note around 3:30 GMT and compare it and try to use it for the entire day. And they are referred as the initial lows and the highs. And the players make the swings between the initial low and the high, make an upward stop and make a downward stop, and that is how they increase the spread. In the case of euro, you find that 1.2859 is the low they set during the European session, and now afterwards they are still holding above the 1.2877. That's what I was explaining, that during the European session they are expected to weaken euro and GBP, and during the Japanese and the US session they are expected to gain levels on a daily basis. So that you need to follow and trade wisely. Then in the case of GBP, 1.6082 was the initial low and 1.6109 was the initial high, and they are closer to the initial high. They are expected to break and go above slowly. They went up to 61.56 and then came down to 60.88, and then again they are just gaining the levels. So why they just made a drop? Just to give the feel that the market is going to make the USD gaining move, and quickly they made the drop in the case of Australian dollar and gain in the case of Canadian dollar, USD CAD. But the drop in the case of euro was very negligible, and the drop in the case of GBP was only about 15-20 pips. But in the case of Australian dollar and Canadian dollar, the moves were nearly about 50 to 75 pips. This is what you need to understand, because many of the traders tend to take, okay, among the currencies, Australian dollar looks very strong. So when it comes to 92.77, we'll take a buy. It will again go to 93.70. We'll book profit. They show it twice. And third time, they just make for the downward draw. They don't do hat trick. So that we need to understand. Then we'll be able to really master that market. So here there is a question that, if possible, please can you explain everything in live chart? Is easy to understand. It is something like you want me to show the figure of an elephant and say this is elephant, a figure of a lion and say that this is the lion, so that you will have a better understanding. But I want you to understand these levels are continuously changing, and trying to compare it to that of the previous second, previous minute level is irrelevant, because you think that it will be able to give you what is going to be the next 5 minutes move, 10 minutes move. But what is more important is we need to find what sort of moves they are doing it in the market. Then you'll be able to understand whether they are going to take it upward or a downward. So I'm not trying to criticize you, because see, we are all being tuned to follow the chart. Fortunately or unfortunately, we are all tuned to follow the chart to have an understanding of the market, because in the figurative expression, you find it is easy to understand. That is what you think. But what is more important for you is yesterday's level is irrelevant to today's level. You just see yesterday's initial lows and the highs, how they have been making moves in the market in the case of euro, and today what sort of moves they are doing it. And yesterday in the case of Australian dollar, what was the initial low and the high? Today what is the initial low and the high? And how they have breached the initial low and come down. Will the yesterday's level or today's level indicate that? Because we assume that these levels will be able to indicate, because we simply draw the simple moving average or the weighted moving average from various days, like 50 days, 100 days, 7 days, 21 days. You go in for various combinations like mad people. You are not in a position to understand which is going to give the clear picture about the market. And as long as the market is manipulated none of these statistics are going to work. Let me tell you, sir, being a statistics professor, I served in the university for 28 years as a statistics professor, and I know that statistics will give a overall explanation about all these sort of samples or the dynamic moves of the market. But if it is being manipulated, when artificial demand and artificial supply are being created, how statistics will be in a position to explain it? So we can think of the demand and the supply, but when artificial demand and artificial supply are there, will you be able to find out what it is? No, even in your common market, you come across that suddenly the price of the commodities go up. You won't be knowing why. Is there a scarcity in the production? And in the commodity market, you come across very often this sort of situation. If you take sugar for that matter, there is going to be a harvest of sugar, and before that they just make a big drop in the market, and the people who have produced this sugar find that they have to forcibly sell it at loss, and once they sell all the sugar, and the players accumulate all the sugars and later on rise the market and distribute it. This is what happens in the market. This is manipulated condition. So in such a manipulated condition, in what way the chart will be able to help you? Callers, kindly excuse me because I am slightly blunt or slightly rude, you may think, but I want you to change your mindset and find why we are not in a position to understand the market. We are attending so many webinars in FX Street and all other websites, and still why we are not in a position to perfect our trading system. Because we think that we have to speak in English and then definitely we will be able to trade. But the players are doing all the communications, everything in Greek. We don't understand the Greek and Latin. So I am trying to teach you that we need to understand the intentions of the players, not by chart. We'll be able to find how the price action is going to show their intentions. And thereby, we'll be able to definitely understand, okay, they are going to rise, they are going to drop. So I gave the forecast in the morning. I gave it in the morning during the Asian session that USD CAD and Australian dollar, they are going to make the USD gaining move. How I got it? See, that's how you should ask the question. How you know beforehand. So I gave last week that for non-farm payroll, they are going to reverse the market. And for that of the BOE and ECB interest rate decision, they are going to make a big drop in the case of Euro and GBP. Then you should ask, how did you know that? Instead of asking, explain it in the chart. So that is something like when I am giving you an advanced understanding of the market, you are asking me to go to that of the elementary level of understanding the market. When I try to explain to you, then again you tend to follow only the conventional statistical analysis. You have to understand the dynamism of the market. The market volume continues to change. We don't have an access to that of the volume of the market volume variation. And we do not know how to read the intentions of the player. We do not know how exactly the players or the banks are going to place the orders in the market. We may simply say that supply and the demand, and you may think that twice the supply will act as a supply level and the demand act as a demand level. Then subsequently you find that the support turns resistance. Then we look for another support, and when you look for another support, you assume somebody is going to buy there. No? Who is that somebody? The market has dropped yesterday and today. And who is that somebody who is buying it there? So we need to understand how courageous that somebody is. Why he is able to buy it when GBP has made such a big drop of 250 pips. Everybody is thinking that it will fall freely to zero. At that time, they were able to buy it. So who is that somebody? So that somebody's intention we need to study rather than trying to indirectly beating around the bush. So here you find that they are holding above that of the initial low in the case of Euro. and they are not breached it. In the case of GBP also, they are holding above that of the initial low for 30 minutes from the start of the session. So that means they wanted to hold and rise. And in the case of yen, they are holding around that of the initial high, 106.28. And I was telling you during the European session, I'm going to do a technical trade of buy and sell. Let us see what happens to that particular trade. Then also in the case of CHF 93.51 is the high. They just came down and just breached it briefly. And 93.71 was the initial high. They breached it by about 9 pips. And now they are closer to that of the initial low. They are just below that of the initial low. So you find that they have made a nominal swing in the case of CHF, but still it is not 40 pips spread between the high and the low. Either way swings, they have done it. And with regard to the commodity pairs, they just breached the high. They just made a downward stop and 2 pips below that of the initial low. So you should understand how they are making the stop-ins. So noting down the initial low and the high is vital. And only if you look into that of the live market code page, you will be able to exactly note down. And if you see 5 minutes candle, then it will give the average of that 5 minutes. And it may show that level as 1.0976. And when it comes down, immediately you think that it has breached the daily low. There comes the biggest problem rather than noting down the exact pip value. Then it breached the 1.080986. I took a buy around 1.0909 level. I was telling you that I am going to do a breakout trade here, but once they stay above that of the initial high for more than 30 minutes, that I call it as a technical trade. Now they continue to rise. But anyhow, I have closed the position during the end of the Japanese European session. So in the case of Australian dollar, they just breached 92.72. And 92.88 is the high. They are not breached it, and they have been holding closer to low, and they just made a downward stop and coming up downward stop. And when during that of the European session, I was doing a buy and sell trade in the case of Euro and GBP. I said that I will not do a buy and sell trade in the case of Australian dollar. And the recorded webinars are available and in FX Street under the heading webinars. So here you find in fxtrade.com and just click webinars. You find below that my tracking the forex market together part 1 and also the Asian session live market analysis webinars are displayed there. You can listen to that and understand how we have to read the market. And I'm just showing in all the 3 sessions how we can easily track using the live market code page without a chart or without even any of the statistical calculations. What we do, we just follow the type of moves they are doing it in the market. So now we have compared the market with that of the initial lows and the highs. I will just explain to you what happened to my trades. So during that of the European session, I took a buy in the case of Euro around 1.2873. Why? Because they made a downward move and kept below that of 1.2877. That was the initial low, but they kept below for 1 hour, but stopped cutting the new low 28.59 they formed for 30 minutes up to 8.15, 8.20 GMT. Then I took a buy position at the final stage in the case of Euro. And in the case of GBP, I took a buy around 1.6090 when it was trading around 1.609598, etc. I just kept 5 pips below that of the market, and that got filled during the webinar time. And you know what happened? After that, I showed you the forecast that market is expected to make a firm upswing and then slide. So only after making an upward stop, they will make a downward move. But they will come closer to low, but they did not breach the low. So that when they quickly come down about 20-30 pips, they'll be able to use that as a trigger and push down Australian dollar and rise Canadian dollar. That is how they create the panic. I told you that they create such quick moves in the market. They are all false moves. So with none of the charts, we'll be able to find out the velocity of the move. Okay, that you have to perceive. So the velocity of the move as a quick downward move or a quick upward move, that has to be studied in relation to that of the time. The speed is calculated or velocity is calculated, the distance traveled by time taken. So the time taken, we don't look into it while referring to that of the chart. We only, for our convenience, use the 5 minutes chart, 30 minutes chart, 1 hour chart, 4 hours chart, and things like that. But have you studied for about 17 minutes they made a quick downward move? No, we don't. So that timing we need to find out. And how we'll be able to find out? By following the time followed by that of the players. I'll come to that. Now, in the case of yen, 106.29, I took a buy position, and yen came down below that of the initial low, 106.28, but they filled it, and it becomes a position for me. And at the time, it was trading around 106.3334 level, and still they are not gone below. They are not hedged me, and I am still holding in position. When they gain the levels in the case of USD yen as the second stage, afterwards they will gain the levels in the case of euro and GBP, as I told you, as a contrarian move. So I'll wait for that and book profit. And in the case of Canadian USD CAD, I took a buy below that, above that of the initial high. 1.0986 was the initial high, and I kept 3 pips above a buy order, buy limit, and that got filled, and it becomes a position. And by end of the session, they breached 1.10 and went up to 912. Then I booked profit using a trailing stop. So booked 20 pips profit. In the case of GBP, once the position make profit, and during the webinar itself, we have seen that it has gone above that of 1.6121. So I kept stop at entry. That is the first step, and subsequently trailed the stop 15 pips away from that other market. Once they breached the initial high, 1.6109, they quickly gained up to 1.6138, holding it. Then again, they went up to 1.6146, holding it. Then I just tightened my stop, and they went up to 1.6156. Stop cutting it for 30 minutes. I simply closed it at 1.6150. I know that late session they are going to drop it again. That is the forecast. And during the mid session, when they made a quick rise, I booked profit. Similarly, in the case of euro, when they made a quick rise to that of 1.2894, I forgot to mention it here, 1.2894, and they went up to 1.2899. Then stopped cutting it, and I booked a profit. And subsequently, they made one more upward stop and to 1.2909 during 13 GMT. So we have to always refer to that of the GMT time. Unfortunately, in the live market code page, they are giving the the New York time, but actually you have to follow the GMT time. Exactly around 13 GMT, by close of the European session, they made one quick upward stop and then start making the slide. So they have a purpose. And if you follow the timings, we'll be able to understand the purpose, how they are making money. So we should also make along with them the money. That should be your attitude, rather than trying to use your own technique of understanding the market. All along, all the techniques were used in the market to understand it. But unfortunately, what has happened, the players have changed the market dynamism. And you know that when a lot of traders have lost the money, and you know that volume has come down, and in such a scenario, they continue to do the similar action. They continue to do the similar moves in the market. So you can understand they cannot change the type of moves they are doing it in the market, irrespective of the volume. So that is the thing we have to capture it. We have to identify, and then you find it becomes very easy for us to understand the players. So now the derived forecast, I explained to you how effective it is. You are able to understand all the 3 sessions. I just showed it. And then the market trading, I told you, we note down around 3:30 GMT the initial lows and the highs in all the 4 majors and 2 commodity pairs, and try to find out how exactly they are going to make the moves from each and every session in terms of GMT. And then afterwards, we use the trading strategy, because even though The forecast is very dependable. The market reading is very dependable, but we do not take any chance because we have limited equity. We cannot just like that do crisis management in the event if the market goes against our positions. So what we do is we always depend on the trading strategy. According to me, the trading strategy is vital. If a trader needs to be a successful trader, consistently earn money from the other market, he needs to perfect the trading strategy rather than perfecting the forecast. You find everyone is trying to perfect the forecast, and you can say my forecast is 80% or my forecast is 90%, even 99.9% that my forecast is accurate. But if I happen to take the position in 1% or 0.0% time, and if I continue to make losses during such times, then I will develop the market fear. And if the market fear is not eliminated, then I will not become a successful trader. So what is the trading strategy? We limit the risk. We keep a hedging order 30 pips away from the entry position so that once the position is taken, immediately we keep the hedge order 30 pips away and limiting the risk to 30 pips. And once the position makes profit of 15 pips, 25 pips, we keep stop at entry and remove the hedge order so that we find that we don't incur any loss in such a position. And then subsequently, we try to trail the stop in a profit-making position. I'll explain it more in detail. So this is with regard to the market timing. So now we are in the US session, 13:30 GMT, the US session started, and now 14 GMT, 30 minutes after the European session start. I just started the webinar, and now we are at 14:30 GMT. So I have only yen position, and I know that Euro and GBP will make swings and firm up. They already done that because I have taken the time to explain to you. I thought that that is more important for you to understand the trading strategy and also how the market reading has to be done rather than simply taking the position and showing you the profit. Because I do not want to just show off myself that I'm a successful trader and things like that. That is not my objective. I want every small trader to become a successful trader and get rid of the market fear and try to earn from that other market consistently, because you come with that equity, small equity, and you wanted to double the equity in 6 months time or 1 year time and things like that. In the process, you'll lose the equity and again open another account and trying to learn it in a hard way by losing again and again money. So the main objective of coming to the market is defeated. Then you become an expert in reading the chart. You become an expert in reading the fundamental analysis. What is the use? And everybody started giving the forecast. Okay, fine. Because there is a saying, the person who gives the forecast may not be a good trader, but you need to be a good trader as well by using the trading strategy. There comes the smartness. So ultimately, what is more important for us is understanding the type of moves they are doing it. So a stop and the false move, they do it for 15 to 25 pips during the early and the late sessions. Just to reverse, 13 GMT, they made one quick upward stop and start making a downward move during the gap time, 13 to 13:30 GMT. And afterwards, they came down and now started gaining the levels. And, they quickly went down in the case of Aussie and just reversed it. And they will not continue to gain. They will simply hold it and allow Euro and GBP to gain the levels. And afterwards, when Euro and GBP make another 20-30 pips drop, they will drop 50 pips in the case of Aussie and gain about 60 pips in the case of Canadian dollar. That is how they are going to do it. And similarly, when Euro and GBP are gaining, you will not come across corresponding drop in the case of USDN and CHF. Now you can see physically that they are doing this. The contrarian move, positive net change in the case of Euro, positive net change in the case of USD, and positive net change in the case of GBP. So None of the charts will give you all this information, sir. Please understand. Then extended move is the one which happens for more than 30 minutes up to 2 hours. And then you find these, all the three moves are quick moves in the market. They quickly gain or quickly drop and reverse. And the intentional move explains the true intention of the player, whether they wanted to rise the market or drop the market. That will be able to be understood following the intentional move. It is very simple. The intentional move will be pip by pip move. After 1.2904, they will show 1.2905, 1.2906, 1.2907, like that. Every pip will be shown. And you would notice during that of the 13 to 1330 gap time drop, they showed 1.2909, came down to 1.2898, then came down to 1.2887. That is how they will simply jump. Hope you are able to understand the slow moves and the fast move. And that is based on the velocity of the move that cannot be explained by a chart. So such intentional move, once they start, they will do it for 2 sessions and reverse during that of the 3rd session. After making a continuation of the move during start of the 3rd session and then reverse. So they don't do hat trick. Monday they drop, Tuesday Japanese session they drop. If you think that they will continue to drop all 5 days, then you are mistaken. They don't do hat trick. Keep that in mind. They pretend as if they are going to do that, but they will simply reverse the market. If you understand that, then you will never become afraid of the market. Kindly see where exactly you are making a mistake. Because of the fear, even though there is a great buy opportunity you find, still you don't buy and you hesitate because of the past experience. On such occasions, you are taken a buy and immediately they just gained about 15-20 pips and then dropped and hit your stop. So you go in for the next level of finding out the Fibonacci retracement, finding out the MACD, finding out how exactly they are going to make a strong move. Ultimately, what happens? You come up to the high. From the low to the high, you don't trade. After coming to the high, when they just breach the high, you go in for a breakout trade. See, all the great opportunities you miss, and you look for only the breakout trade about that of the high. And the players are much smarter than you. They pretend as if they are going to break the high and start making the slide. After you enter a long position, they just drop because you don't wait for 30 minutes after breaching the high, whether it is a stop and or whether it is an extended move or an intentional move, you need to identify. But if you fail to identify, then you think of a breakout trade, then the breakout fails. Then people say that, okay, you have to be very smart, find the candle formation during the breakout, and then only you can enter, because many of the breakout trades are recommended become failures. So you just continue to give one sort of recommendation, that becomes a failure, then you go in for another recommendation. But if you try to follow the type of moves, I am doing it for the past 17 years, sir. They are not changed the type of moves. And in between the high and the low, they are doing the swings. So without breaching the high or the low during the mid session. No. And the trading strategy. Okay, we have done all the analysis, but we need to find out in the event if the market goes against, because it is always better to think the contingency plans beforehand, not simply keeping the stop and try to move the stop away from the market when they are coming closer to stop. That is not trading strategy at all, because many of the traders, out of fear, they do this. And you have to see, if you use the stop, then you want to see that the stop is not hit, so that you have to forcibly accept the loss. What happens in that process of moving down the stop lower, 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 you find they continue to come down. Then you find the usable margin is eroding like anything. Then accept the loss once it becomes unbearable. Then the market fear grips you. Then it continues. Whenever you take a position, when it shows 5 pips profit, you just grab the profit. When it shows 60 pips, 70 pips loss, you continue to hold it. That is not trading strategy at all, sir. And that is not planning of your equity. And by that, you will not be able to earn money from that other market. You are only doing crisis management. So kindly understand that contingency plan is vital. Beforehand, in the event if the market goes against, what are the steps I have taken? Stop. If the hit stop is hit, I find it really very difficult to accept. So what is the alternative? Then I will use the hedge order. So accepting that some of the US platform, all other platform, they resumed the hedging orders facility in the same currency pairs. So what you do is once you take a buy position, keep 30 pips below the hedge order, the buy stop or a sell stop for a sell stop for a buy position and a buy stop for a sell position. Then once the position makes profit of 15-20 pips, you keep stop at entry and remove the hedge order so that you need not even complicate your trading using the hedging. And the entry, as I told you, that during the early and the late session, try to focus on the entry in the case of majors and the commodity pairs. During that of the mid sessions, you can try to decide on the entry in the case of the crosses. Then exit, try to close the position within the same session. If you entered during the early session, try to close it during the late session. And in the event, if the going is good, they are shown about 60-70 pips profit, then probably use the trailing stop and use the trailing take profit order and try to maximize it so that suddenly if they reverse also, a minimal profit is protected. A profit making position will not become a loss making position. If you use the trading strategy of simple method of using a trailing stop in a profit making position and using a hedge order in a loss making position, you will continue to make money in the event if it is hedged. Because always the contingency plan, we have to think ahead in the event if the market goes against what I am going to do. So if they hedge you, the hedge is filled and the hedging is making loss for 10 to 30 minutes, then you understand, okay, during that of the stop point, they just filled your hedge order and afterwards it is continuously making loss. So you understand that during the stop point, they filled it. Then you simply close the hedge order with 1 or 2 pips loss or 5 pips loss and then keep another hedge order 20 pips or 30 pips below the market for a buy position. And once they start gaining after a downward stop and they gain. So you can trail the hedging order upward to the original level until you keep stop at entry. Till such time you can trail the hedging order. Okay. In the event if the hedging is filled and it is making profit and loss alternatively, try to see that they are doing the extended move. So that is why you find profit and loss around that hedge. So once they stop cutting the new low for 30 minutes, you just book profit in the hedge about 5 pips or 6 pips. And later on, you will find they will start going upward. You can keep another hedge order and trail it up. And in the event, if the hedging is filled and the hedge is showing profit for 30 minutes continuously, that means the market has reversed and gone against your expectations. Okay, then keep stop at entry in the hedging. If you are confused, you think that you are taking a wrong position, no problem. After 2 hours or after even 10 days, you can close the original position with the hedge, accepting 30 pips loss. Not keeping an open position for 100 pips, 150 pips loss. You just accept the desired loss of 30 pips. In case if you don't understand how to trade. Otherwise, keep stop at entry in the hedge. Once they drop and form the new low and not breach the new low for 2 hours, then you book profit on the hedge on the downside and keep another hedge order 30 pips below, risking only 30 pips again. And once they start gaining the levels, as I told you, they don't do hat trick. First session rise, second session rise, third session they don't rise, they just reverse. One day rise, second day rise, third day they don't rise. They have to necessarily make a downward stop and before making a rise. So let them hedge you, and the hedge is making profit for first day, second day, doesn't matter, third day, book profit, and later on you find continuously it gains, and you will be able to hold the buy position and trail the hedging order upward until you are able to keep stop at entry on the buy side and continue to book profit on the buy side. Is it difficult? I don't have much time to take positions here. Anyhow, only the euro position, the USDN position we are carrying forward, and I don't have time to take any fresh positions for the European session. They are expected to only swing and firm up during that of the European session. So you may be able to get, if you take a buy, actually around 14 GMT, you would have taken a buy, you would have just booked about 10 to 15 pips profit. They will be consolidating euro and GBP and try to gain more levels in the case of USDN and USD CHF. Later on, you will find all will become positive net change, and these USD CAD and Australian dollar are expected to show more and more of USD gaining move in coming days. Till year end, you will come across such contrarian moves. So let me answer to the questions which are asked here. MRC, but they came back to the European morning level and hit break, even stop. See, that is what I told you, the forecast gives that indication, and also we should be able to follow that of the market reading, the type of moves they are doing it. And then you will be able to understand what they are trying to do it. And if you simply follow the chart and then ask me why it is happening, I'll not be able to explain it, sir. You have to track the type of moves they are doing it. Then if you have any question on the type of moves, then I'll explain to it. Then MRC, the full moon here would make a point in the market reversal. Probably they are all attributes, sir. So I'm not really... I will not go with that unless and otherwise it is really proved in the market. We have to do the blindfold test and find out whether it is moving like that, and we have to find out the consistency with regard to the full moon and the new moon, how far it will influence. Because there are studies with regard to the influence of moon on the decision making and also on the global surface. The tidal waves, in the sea, the high tide and the low tides, they are being influenced by moon's position. And, during the full moon and the new moon times, you find the tides becomes wild. And also there are studies with regard to the lunatic people, those who are mentally weak or maladjusted. Such people become aggressive during such full moon and the new moon. And those who are emotional become more emotional during such time. Probably if you track it that way, it might make sense. They become more emotional and do distress trades. Thereby you come across more volatility and the reversal in the market. Indirectly, we can conclude it that way, but I don't find any hard examples or evidences to fulfill such statement. Then, is Aussie going to fall more? Yes, Aussie. Harsha has asked the question. Yes, Aussie is expected to make a downward move, sir. Don't try to do buy and sell trade in that. Probably you can do buy when they just stop breaching the low for more than 30 minutes, but it can be an intraday swing trade for about 15-20 pips. But don't aim for 100 pips, 200 pips, and don't think that it will follow euro and GBP. And when euro and GBP are falling from that of the high, euro 4 has dropped from that of 1.40 and GBP dropped from that of 1.7150. At that time, many of the people thought that Aussie will go to parity or above, but at that time they have been holding Aussie. And then subsequently, when euro and GBP were dropping, Aussie was holding it around the same level of 0.9394, etc. Then people thought that it is the strongest currency. And by that, they handle euro Aussie and GBP Aussie crosses, the commodity crosses, and also euro CAD and euro GBP CAD, because many of the traders, because of the high volatility in the crosses, they take such positions thinking that the US dollar sentiment or euro sentiment may not work on such crosses. But in the case of crosses, the players make 50 pips drop and the rise, and they make very quick move, aggressive moves. And when you are following simply technicals, they simply make a reversal of it. Once all the traders follow technical and take sell position, they gain about 250 pips. Everybody will come for a short covering. Afterwards, they drop 500 pips. So if you are interested in that game, then you can continue to do it, but you will not make money. So my humble suggestion for the small trader is focus only on euro and GBP. Try to trade. Even if your position is wrongly taken, you will be able to see profit in a day or two or about a few days. And Ines got a question. In your records, you seem to keep entry daily records on an initial high and the low. Is there any importance is also recorded, actual high and the low? See, actually, initial high and the low, if you note down, and also the actual high and the lows, you will be able to find how far they are making the market spread. Then you will be able to understand that they have got certain limitations. In order to understand the limitations on a daily basis, weekly basis, and your noting down of that will be able to help you. See, you know that GBP has dropped about 200 pips, 250 pips on the first day. If you think that every day they will drop 250 pips, then it is wrong. Because they have got a limitation. They cannot drop endlessly and bring it down to zero. Then could you please clarify on swing and slide and swing and firm up? Swing is making a small, about 5 to 10 pips up and down move for a few minutes, and then later on slowly gain the level, and that is swing and firm up. Then they just do near that of the high a swing for about 5-10 pips and then slowly come down. So what is more important is when they are going to reverse, you have to find whether they have done the stop point and also the time they are doing it. During the early session and the late session, only during the early session they will be near that of the high or near that of the low. During the mid session, you'll find that they will be in the middle level in the case of euro and GBP, and they will make the contrarian move. So understand in live market quote page without taking positions how they are making the moves for some days. Then you find that simply looking into that of the live market quote page will give you enormous information for you to trade, and that will be foolproof information. I'm not joking, it is serious. And I stopped using the charts for the past 15 years. I find I am really perfecting studies. And that is possible for everybody. As long as you are human and having a little bit of smartness, you should be able to grab it. I'm not giving something which is beyond the understanding of human. Okay, swing and firm up. See, the swing and firm up, swing and slide means USD will firm up or no. They are all pertaining to that of euro and GBP. What I have given it in the session-wise forecast, they are all pertaining to that of euro and GBP, not US dollar. US dollar is the universal currency which is trading against that of the majors, the four majors, euro, yen, GBP, and CHF. Then the two commodity pairs. So they become the majors in the commodity pairs. And there I am talking about only those numerator currencies, euro and GBP of the major. The denominator currencies, they make different type of moves. That is why I don't give the forecast of that. And I am giving it orally that they will make one-sided moves. As I'm not able to understand it, not able to interpret the forecast. So I explained it with the help of the slide again. Okay, swing and slide, swing and firm up. Now today, swing and slide means they make the higher levels that swing near that of the high or near that of the low and slowly firm up and make one slide. So this is the early session move, this is the late session move. Early session move, late session move. Because I'm talking about euro and GBP in all. Hope it's clear. Not of US dollar. Because for small traders, I recommend only trading in the case of Euro and GBP. That is why I give the forecast also pertinent to that of Euro and GBP, so that the small traders, without spending much on receiving the forecast or the signals, will be able to make money from that other market. And today, brokers earn money from client losses or from client commission. As far as brokers are concerned, they have got various methods of earning money, so we don't have time to talk about it. Your opinion on Scotland impact on GBP? Nothing will happen, sir. You will come across later on GBP spiking up from Wednesday. I show you the forecast page. Okay. I was explaining to you on Thursday, 11th of September, will come across a sudden upward spike in the case of Euro and GBP, and everybody will forget about that event and think of other events in the market. Okay, so you know that so many times people are talking about the Greece crisis and also the European crisis, the Spanish crisis. What crisis is not being discussed? And also the double recession in the case of US. See, everywhere, see, if you notice that non-farm payroll is negative this time. And if you look into that of the data released from that of Europe and also from Great Britain, they might be negative. But what they will do, they will just drop Euro and GBP for the negative European news or the UK news. And for the US session negative news, they will rise Euro and GBP. What logic it is, you tell me. No, for the European negative news, Euro and GBP should drop. Okay, fine, we understand. Then, when US rate is negative, how can it rise much more than that? So, do you give weightage for the US news? Do you give weightage for that of the European news? Okay, European news has got 40 pips weightage and US news has got 60 pip weightage. Is there any talk like that? Or anybody is able to measure it that way? And still, we think that the players are going to move in tandem with that of the fundamentals. And you know what happened? On Friday, when that non-farm payroll was negative, they simply gained the level in the case of Euro and GBP and dropped it. And now everybody has forgotten about non-farm payroll. Everybody is talking about Scottish. See, that is the power of the players. So they just confuse all the traders by highlighting in media and all the website everywhere. Okay, this is the problem. And with this problem, the world will come to a grinding halt. That is how they present it. Immediately, the traders become helter-skelter and go and make all distressed trades, liquidate all, and think that US dollar is a safe haven. And later on, find that Euro and GBP start gaining the levels. So who has bought all those sellings? The big players. So if you think about such events, they are all nothing but the excuses. Every time you will come across new excuse. So if we continue to get cheated, we cannot help it, sir. I can only bring in awareness, and FX Trade is kind enough to permit and me to speak about it, which is much against that of the market conventional expressions. Still, if you are not able to understand, I will feel sorry about it. Okay, these are all my contact details, and I'll come back on Thursday after tomorrow and explain to you again during the Asian session live market analysis, and we will do the forecast study again and see how exactly they are going to take up the market. As far as the forecast is concerned, I explained that the trend reversal is happening on the upside now. They have made the downward move in the case of Euro and GBP, and they do the lower level consolidation with a downward stop in order to make a rise. And they accumulate the buy position. After taking the buy position, they are supposed to make big rise in the market, and then they are expected to book profit. For that, they have to quickly gain about 600 to 700 pips. So at that time, do buy and sell trade and get the benefit out of that. Okay, you come across the links which are given here. Okay, the webinars which are recorded today, and they are all under the archives. So kindly go through the webinars and try to understand that we take so much of effort, and FX Street is taking so much of risk in openly allowing me to talk about all of those things as a controversial personality. That's what they used to say, and against that of the other conventional analysts. But I want the traders to understand what is actually happening in the market and don't get cheated again and again. Try to earn sincerely by understanding who is trading against us. So the players are doing their job of making their money. I will not blame them. And if we become fools, and that is our problem. So we have to become smart, and our hard-earned money should not be lost in the market. Try to focus on that. I take this opportunity to thank FX Street for permitting me to present all the three webinars today, and I have taken much of your time. And please understand, the market has to be looked with a new dynamic approach, and understand that somebody is trading against, and how exactly we can treat their intention is vital. So thank you one and all. If you've got any questions, you can ask me through email or contact me through chat or over the phone if it is needed, very urgent. And I will not charge you or anything unless and otherwise you get convinced with the forecast and become a subscribed member. I will not give any sort of promotions, or I will in fact discourage you to become a subscribed member. I want you to earn, because I do not want anybody to suffer for the sake of trading, that is spending more money in order to earn money, and the spending becomes a loss, which is a miserable situation for the traders. I do not want to see that. Okay. So all the best in your trades. Calmly trade, control your emotions, use always the contingency trading strategy. Thank you one and all. See you on Thursday. Thank you, FX Trade.